please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me Anuj and Sonia. And although I'm emphasizing the green color, it looks like today, after a high yesterday, the bulls may perhaps take a breather. That's what the global indications are at this point in time. Perhaps there will be a little bit of a fly in the ointment from what SEBI is likely to do on December 28. If you remember, they had long back spoken about immediate default disclosure. If corporates default on a loan today, they have to disclose it to the exchange tomorrow. That rule was shelved, not shelved as much as deferred. And now we have a CNBC Awaaz exclusive that it may be reconsidered. So that would be a bit of a ruffle for some of the stocks, the leveraged ones. Not that they are the leaders of the market anyway. It may hurt the banks a bit. But I think among the positives for this market will be those two big boys, HDFC Bank and HDFC. Although we all know that capital raising is coming, that will be a high for the market. But ultimately, it will be TATA Steel. I mean, is expansion back? Yeah. Is growth really back? If, the tallest steel company in the country is speaking about a 23,000 crore expansion.
Yes, that's going to be one of the stocks of the day, right? Tata Steel, because of their expansion. But Lata, morning, Anuj, morning. Yesterday, the markets hit virtually at an all-time high. I mean, 10,490 is now what, just 30 points away, right? And if there's someone who said, "I told you so," it's Anuj. He told you yesterday that this is the makings of a market that could perhaps get to new highs. But Anuj, the key question now is: are we going to face resistance at these all-time highs, or will it be taken out easily, considering that there's a big political headwind that is now out of the way, and the course seems to be a bit more clearer than before?
Morning, Sonia. I'm not getting into this trap of, if I told you so, because, the market has the funny habit of taking you back to the ground. It's a law of averages. Look, yesterday was easy call. Yesterday it looked like the ingredients were in place for markets to hit record high, at least on a closing basis. My base call was that maybe today you have, all-time intraday high also being taken out, but for that to happen you need gaps, because otherwise it's tough for
for it to sustain.
For it to sustain, because emotions get involved, and there are lots of other issues which just one second.
Okay. I think it's somebody chiming in agreement. Okay, go ahead.
Anyway, so the point here is that all-time highs either are taken out by a gap or some macro news. For now, I don't think we have that. So now you need to see if 10,500 is taken out or not. The next big trade will come if 10,500 is taken out decisively, because that would mean the next phase of expansion, which takes the market higher by about 300, 400 points. Today is a day for scalping trade. You want to see if yesterday's low is holding. If there's a bit of a gap down, then you want to buy that. You want to see if yesterday's high is holding or not. Maybe you want to take an adventurous trade over there. But the point that I've been making for many days now, it's a market where you only look at mid caps, because that index is once again at record high. It's continuing to outperform the Nifty, and I tell you something,
it's been at record high, I think, every day of this week.
Yes, and it's outperformed the index by 20% in 2 years. That's a massive outperformance. You can't just fault it away. 20% outperformance in 2 years for mid caps is telling you that portfolios have done remarkably well, and that's why I think the index only tells you half the story in Indian bull market. It's really been stock specific.
On that account, I had one more question, Anuj. Also, with respect to large caps, if you look at it, I mean, look at names, Maruti, HUL, M&M. Are we also going to see a phase where there could be basket buying from FIIs, and that's why, a lot of large caps are also moving?
Large caps are moving, and of course, they will, make all-time highs once again, Sonia. That will happen. But the bigger money is being made in the mid caps. On that point, when autos rally, bulls sense that something big is coming. And yesterday, for example, M&M, for last 2 or 3 days, M&M was a stock to track. Look at the delivery buying in both M&M and Maruti for last many days now. It's just phenomenal. So I think things are looking up. I just want to make slightly different point on Tata Steel, though it's not related to today's trade. Tata Steel, in December 2007, on this day as we speak, was 937. The stock in 10 years is at 710. So long term, we talk about long term. In long term, you have destroyed wealth with Tata Steel. In between, it's been the greatest short, and it's been the greatest long as well from the low point. That's commodity cycle. They invested in Chorus and after that the stock went up 50%, by the way. They invested in Chorus right at the peak of a steel cycle, or close to a peak of a steel cycle, and they got out right at the bottom of a cycle. So sometimes when these things happen, just take a note of that. Though this time it could be different because it's domestic and not, going out to Europe, all that, that kind of stuff. This time, with NCLT and so many issues, the domestic cycle could be looking up. But I just thought that I'll just present an anecdote.
No, actually, if you, I don't know if you've seen Nilesh Shah's presentations. If you looked at the entire Sensex and the value it has generated, two stocks that didn't generate value, Tata Steel was one of them. So that is even from a 20-year, 25-year period. But my point was not to really speak about Tata Steel. I mean, the support for the market will come from the HDFC twins today. The point about Tata Steel was, is this expansion indicating that, what was our complaint about our growth? Consumption is very good. Where is capex? Now that has arrived. And actually, there are several other indications. Look at the aviation numbers that came yesterday for November. Cement numbers have come in today. And that for the month of November is looking good. So I'm more pointing to the fact that the macros are looking good. Though, of course, it is not one single macro event. But overall, the macro picture, especially capex, is now returning to the table, something which we missed for so long.
Oh, yes. And, for Tata Steel, Nigel tells us that there is a lot of dilution that will take place because of the fundraising that Tata Steel is doing. So don't lose sight of that. It's not just all hunky-dory because of this expansion plans. But we'll talk about that in greater detail in a bit. Let's kickstart the show and tell you what our wise experts have to say as we head into trade this morning. Gautam Chowcharia of UBS says the Gujarat win should give the government confidence to continue with its fiscal roadmap, but also with its anti-corruption measures. He says further anti-corruption measures may not be great for growth in general, though they would be obviously positive in the long term. He adds continuation of fiscal consolidation stance means policy inducement for near-term growth will be still elusive. He says this is structurally positive for growth eventually and can attract debt flows based on macro stability. But will the government turn populist ahead of the 2019 elections? Gautam says we have seen a pro-rural, pro-poor tilt already in terms of government announcements as well as states' farm loan waivers. However, he adds this has already been within fiscal discipline contours.
Okay. Money market views. Pramit Brahmabhat of Veracity says, taking cues from positive domestic equity market, rupee will appreciate for the day. Expects the spot USD INR pair to trade in a range of 63.80, 64.20, and that's not very good for IT companies. Now the dollar is going to cost less than 64. And on bonds, Dalal of Edelweiss says, having risen recently, the 10-year benchmark bond yield appears to be consolidating in a range of 7.15, 7.25. He expects the bond yields to trade in a range in the near term. Says corporate bonds are under pressure amid quarter-end position adjustments. He expects the credit spreads to remain wide until foreign buying emerges in early 2018.
Okay, over to Mangalam now then for the world view.
Well, after 2 days of hitting consistent record highs, the Wall Street took a bit of a pause, ended lower, and this was because of the tax bill snafu. Remember, behaving like a bit of an elusive girlfriend out there, the tax bill, because 3 provisions did not meet the rules. So the House will take another shot at it again and hope to pass the tax bill again in today's trading session, rather tonight. In a rare downgrade coming in for the Wall Street, Apple, that stock was downgraded by Nomura Instinet, and they've downgraded the stock to neutral. That one was the big drag on the frontline indices. Across the Atlantic, though, we saw more red than green on the frontline indices. The FTSE was the only one which outperformed, barely above the flat line. But if you take a look at the peripheral indices too, there were sharper cuts out there. The one index that really stood out was the Ukrainian index, up nearly 1.84%, but sharp cuts seen across the emerging market space as well. If you take a look at the Russian as well as the Brazilian index, the Russian index down by more than 1%. As far as the Asian markets are concerned, as we speak, they're moving lower, more red than green in the Asian screen as well. And the SGX Nifty indicated a start in the lower end today, and that continues a cut of close to 15 points.
Okay, thank you very much for that, Mangalam. So the cues from global markets more red than green. We have to take a break and come back with our top 10 list of stocks. Let's leave you with what we got from Jeremy Siegel, the professor at Wharton School, what he makes of the US tax plan overhaul and its impact on markets. Listen.
I think we're only like 1% away from 25,000 on the Dow, and that certainly can happen. But I'm one of those people, and I'm very positive on the tax plan. But sell on, buy on the anticipation, sell on the news. I think that all the good things about the corporate tax plan have been built into the rally that we have seen over the last 2 months, and I'm not sure how much else there is really going to be. The world of difference is the interest rate. Dot-com bubble, we had treasuries at 7%. Today they're 2.5%. Even if they move up to 3.25%, I mean, we're still in an amazingly low interest rate world. I think interest rates are, I mean, that's the world's largest asset class is fixed income. If they don't give competition, I think that's good for the stock market.
The show, well, as we told you earlier, there is an absolutely flat movement across most global markets this morning. The SGX Nifty is slightly in the red. Europe was flat. The US markets just consolidating after that huge move that we saw yesterday. Let's see whether we can convincingly take out the all-time highs. But our research team is here to give you the list of top 10 stocks that you need to watch out for as we head into trade this morning. Hi guys, morning to all of you. Anuj, what are you looking at today?
So Sonia, I just want to explain a technical point on Mahindra & Mahindra. While, the stock anyway is among the strongest stocks and has been going through a big rally, the last part of rally that you've seen in Mahindra & Mahindra is basically a bonus stripping rally. The stock goes ex bonus tomorrow, and you've seen delivery buying of 1,500 crores over the last 4 days. 1,500 crores of delivery buying has taken the stock up 10%. Bonus stripping essentially is a concept where, because the stock's going ex bonus tomorrow, you can accumulate stocks today, and after it goes ex bonus, you sell to make capital loss, because you have a knowledge that for the bonus shares that will come to you, you will hold them for 1 year at least and won't pay any tax on that, and there won't be any capital destruction. So that's why this is a concept which is used for tax planning, and that's why you've seen this kind of rally in Mahindra & Mahindra. Having said that, again, a stock which has underperformed escorts, and so there's a bit of a catch-up as well, which is on. But the last bit of rally is on account of bonus stripping. It could continue today as well because it goes ex-bonus tomorrow. The other set of stocks that I'm watching out for is the two telecom stocks, MTNL and ITI. I think yesterday, our sister channel had an interview with telecom minister. We spoke about ITI being profitable soon and the DOT having a plan for MTNL revival. So these two stocks, they have done well of late though. ITI has bounced from 20 DMA and MTNL from 200-day moving average. And we've heard these in the past as well. So I would want to see some concrete evidence of this, but that could be interesting.
Yeah, I'm sure there'll be an initial bounce
yes,
for sure. But I don't know how to what extent a company like MTNL can be revived at all. Excellent fixed lines, yes, but not growth.
Exactly.
Okay, well, surely the stock of the morning is going to be Tata Steel announcing a mega expansion. Nigel?
Well, that's right. Tata Steel announced this mega expansion. But Lata, just to say this, that in the last couple of months, the management has indicated to all analysts that this is going to come about. So the street was very much expecting this expansion to take place. To give you a few details, well, the capacity will go up at Kalinganagar. Currently, it is at around 3 million tons. It will go to around 8 million tons approximately. The total capacity goes up from around 13 million tons to around 18 million tons. Remember, this will happen over a span of the next 4 to around 5 years. If you're asking in terms of per million ton, how much will they spend? Well, this is coming at a cost of around $720 on a per ton basis. Remember, the earlier facility at Kalinganagar was set up at more than $1,000 per ton. But that's really the math in terms of what Tata Steel is going to do going ahead. The big point that you'll be focusing on is that the dilution is nearly around 18%. So that would be a bit of a negative. CLSA, they've used this as a positive on the whole. They say that now, in fact, post the JV that was announced, they're going to be focusing on domestic operations, and they like that. Hence, they have the buy rating with the target price of around 800 rupees odd. Why are we going with red today? Because it's 18% dilution, point number one. Second point is Manisha told us earlier this morning that some of those steel plants in China that were supposed to shut down capacity, well, that's not really coming about in some plants. So that's a bit of a niggle as well for the markets. And because of that, we're going with red for today. Longer term, yes, it would be a positive.
Okay, all right, Nigel, thanks a lot for that. So Tata Steel will be on our radar this morning, but the other stocks that we will look out for is HDFC Limited and HDFC Bank because of that massive fundraising. Abhishek joins in to tell us more. Abhishek.
Well, Sonia, the board of HDFC Limited has approved a fundraising of up to 13,000 crores. This is divided into two segments. So one segment of 4,500 crore will be used to invest in the health insurance business, inorganic or organic opportunities in the health insurance business, also in the stressed asset real estate companies, and for affordable housing segment. The next 8,500 crore will be used to invest into HDFC Bank's QIP, that is up to 8,500 crores. So what this means is that there will be some dilution that will happen in HDFC Bank. Through HDFC Limited, the dilution will be about 2% and the rest 8% can be announced today. So capital adequacy ratio of HDFC Limited will rise by about 150 to 170 basis point, while the book value of the 4,500 crores that goes into HDFC Limited will lead to an increase by 9 to 9.2%. Back to you.
Okay, let's just listen into what Keki Mistry, the Vice Chairman and CEO of HDFC, told our reporters yesterday.
The board has approved three things. One is to invest money in HDFC Bank to maintain our shareholding in the bank. Now currently our shareholding in the bank is marginally over 21%, and we would like it to remain at 21% plus after the new capital issue which they are planning to do, and also after the dilution which takes place because of the various stock options which are there with the bank, some of which have been granted and some of which may not even have been granted but have been approved by shareholders. So to do that, we would need to invest close to 8,500 crores, or at least the outer limit that the board has mandated is that we can invest up to 8,500 crores in the bank to maintain our stake at 21%. The board has approved a total capital raise, a maximum, let me put it, maximum capital raise of up to 13,000 crores. The 13,000 crores of capital raise could be in various forms. It could be in the form of pure equity. It could be in the form of a compulsorily convertible debenture with or without any warrants attached to it. So the instrument has been left open. There is a committee that has been set up by the board, and that committee will meet frequently and decide various things, how much to invest, exactly how much money to invest in the bank, exactly how much capital to raise, what form the capital is to be, in what manner the capital is to be raised, what kind of instrument is to be used, and things like that.
Okay, that's HDFC, but Lata spoke about that SEBI meet, and banks will be in focus today, Lata, because of that.
Yeah, I would assume one thought this was shelved for a longish bit. But if SEBI looks determined, and this is a CNBC Awaaz exclusive, that is on the December 28 meeting agenda, that companies which default on their loans have to disclose it to the exchange. Now, last time around, the rule said within 24 hours. Now, Awaaz tells us that their exclusive is that rule could be tweaked, but then you have to disclose default. So to that extent, it would be negative for banks in the sense that you have 90 days before a default is made into an NPA. Now, if you disclose it immediately, say within a week, within a month, I don't know what the tweak will say, immediately rating agencies will have to downgrade. And once you downgrade, banks will have to start providing on their books under the new IFRS rules, which kick in from April. So this could be negative for the banks, but more importantly, so you have to look at all the SBI, ICICI, Axis variety, which could take a little bit of a setback. But it's also negative for the already beaten down, extremely beleaguered stocks, say an Adani Power, an Arcom, the JP Group stocks. But then, you've seen enough of selling in those stocks already. They could be under pressure.
Okay, and in the banks, you're also going to watch out for Indian Bank today? Yeah,
just to reiterate, the Indian Bank has got board approval to raise 7,000 crores. This was already known on December 14th. It was a full and final approval that they got yesterday, so that could be on your radar.
Okay, we're also going to look out for ONGC this morning because some positive brokerage notes have come in. Naveen joins in. He's going to tell us more. Naveen, over to you.
So, Sonia, recently, few days back, both CLSA as well as Edelweiss had come up with positive reports. In fact, now Macquarie, they have initiated a coverage on the counter with outperform rating and its target price of 290 rupees. Remember, this is a 60% upside from the last price. So, what the brokerage believes is they factor in $65 per barrel for crude in FY20. But according to them, time, the ONGC stock price currently factors in only $52 per barrel for the crude. Also, they believe that the EBITDA can jump by close to 50%, that is to $21 per barrel by FY20, majorly due to operational efficiencies as well as an improvement in realizations. Back to you.
Okay, thanks a lot for that, Naveen. Auto companies again on radar, Sonia.
Yes, I mean, you know, there is no new news here except that a lot of people are now doing a study on what is leading to the surge that we're seeing in terms of demand. And there's some interesting reports on how rural-centric models are now seeing more in terms of sales. So models like Alto, the Hyundai Eon, the Mahindra Bolero have reported a positive growth after years of degrowth. In fact, Maruti is the biggest beneficiary of this rural recovery because almost 30 to 35% of their sales comes from the rural market. But I would watch Mahindra very closely because, you know, their product Bolero was not selling for years. It's seen a degrowth in terms of sales for at least 3 to 4 years now. And now we've seen year to date, there's been almost a 38% growth that Mahindra Bolero has seen. So just indicates that perhaps the rural markets are picking up for some of these models. In fact, Maruti's rural market share has now risen to the highest level ever at 71.3% year to date versus 67.8% last year. So rural-centric models are seeing more sales.
Yeah, well, I guess yesterday the rural theme played out for all those stocks. But I have a huge complaint with the auto stocks. You know, these companies have made us believe that higher auto numbers is growth. I mean, it's choking every city. It's about time we re-evaluated what is growth. It can't be more cars on the road. It should be something else. But in any case, for the stock markets, that will be very positive news. But Nigel, you have some positive news from Coal India?
That's right, Lata. You know, yesterday you all had interviewed Coal India and we had asked the management about a coal price hike. Now, this time around, they didn't deny outright. That gave a sense that, in fact, yes, there could be a price hike that's come about. But it's come about in more an indirect manner. Why? Because they're talking about some evacuation charges. I spoke to a couple of sell-side analysts this morning, and they as well were wondering, what is this? But effectively, this will be an indirect price hike, so it will be good news. What will they generate in terms of revenues? Well, 2,500 crores if it's for the full year. So that tells you that, in fact, close to around 500 million tons is what they are counting on. That's majority of their production. And for this year itself, they're saying that 800 crores is what it will add to their revenues. So some good news coming in from Coal India finally. Let's hope that it reflects in their realizations when they report their numbers.
Okay, thanks for that. Well, if we speak about coal, how can we not speak about power? Anisha joins in. She's going to tell us why we have to look at some power companies this morning. Anisha?
Well, yes, good news coming in for Coal India regarding that price hike, but that is not a good news when you look at the power companies, because remember, majority of the cost for power companies is coal, and any hike, of course, impacts the business. But having said that, do remember that the companies that have PPA in a cost-plus basis, it is a pass-through for them. So any increase in the coal price will be given on to the discoms, and even the PPAs who are competitively bid have a clause of escalable coal cost. So let's see whether which PPA has what kind of escalable clause. However, this will be negative for the companies that sell power on merchant sale basis. There also the prices will go up for all the companies, so the competition will remain the same. However, if somebody has signed a short-term PPA for a specific amount, that will come under a bit of pressure. Lastly, just one thing to mention, since it has been increased as an evacuation charge, we need to see what is the way they account for it, whether it is the coal price itself or some other head, but nonetheless a bit of dampener for the power companies. Back to you.
Okay. Anisha, thanks a lot for that. And finally, some bulk deals and stocks in news. Ronit?
Yeah, so Anuj, just some bulk deals, interesting bulk deal. Butterfly Gandhimati. Ashish Kacholia bought around 2 lakh shares at 525. Remember, this company has been a rank outperformer up around 180% in the last 3 months. Moving on to Ashiana Housing. ICICI Prudential Mutual Fund have bought around 22.5 lakh shares at 157. And the seller was interesting, Jwalamukhi. They have exited completely, selling around 26 lakh shares. The stock has been underperforming, up only 22% in the last 1 year. Moving on to Sangam India. This company, Nikhil Vohra, has bought around 57,000 shares. They are into solar EPC. They recently won 2 orders from the Maharashtra Power Generation Company as well as railways. Moving on to Wellspun Enterprises. They have decided not to invest in an NBFC. Remember, they announced this around 2-3 months back. So one positive news coming in there. And finally, moving on to Bharat Fin. The Competition Commission of India has approved the merger of Bharat Fin with IndusInd Bank, so you can expect a light green on that stock today.
Okay, thank you very much for that, Ronit. Yours truly is a user of Butterfly Gandhimati products. I can vouch for them. Their mixers are good.
Just want to clarify, I don't think it's Sangam India which is the stock info. It should be Sangam Advisors, because Sangam Media is a 190 rupee stock, or Sangam Advisors is 46 rupee stock. So we'll find out which one it is.
Yeah, if I remember right, Sangam India was not in solar.
Sangam Advisors is, so that's why. I mean, if it's that company, then we'll find out. But
just keep it on your radar. Yes.
Okay, so let's do one thing. Let's, in the meantime, recap the list of our top 10 stocks to watch. Expected to gain today are names like Tata Steel. You have HDFC Bank, HDFC, M&M, Maruti, MTNL, ITI, ONGC, Butterfly Gandhimati, Ashiana Housing, Sangam Advisors, Coal India, Wellspun Enterprises, Bharat Financial and IndusInd Bank. While stocks expected to be under pressure are Relcom, Videocon, Adani Power, JSW Energy and CESC. Let's take a quick break on that note. Our technical experts join in on the other side, so do stay tuned in.